Hey everyone, it's Ryan with Stock Investing and Trading 101. Today we're going to be doing a stash portfolio reveal and review. So I'm going to be showing you guys my stash retirement portfolio. It's currently got about $18,000 in it, and we currently have a $4,100 return. We have about a 30% return so far in the year. We've been doing really well with this portfolio, and surprisingly it is because we don't trade it as often as some of our other portfolios. Since this is a retirement account, what I like to do is buy high quality stocks and pretty much just hold on to them and do proper investing, and I don't like to overcomplicate it, and it's actually been working out pretty well. So let's briefly go through some of my top investments and show you guys what I'm investing in and what I'm currently holding for the long term. Currently, my biggest position is Caterpillar. Caterpillar, as well as most of the other industrials, has had a very rough couple of weeks. Ever since June 7th, it's pretty much been in a correction. We've probably had a dip of at least 10 to possibly 15% on Caterpillar from the all-time highs. So I've been aggressively investing in Caterpillar as well as some of the other industrials. We also have Boeing with a similar story. Boeing is probably a little bit weaker of a company right now, and even the pullback has been more severe. This stock could be 30-40% from the all-time highs. So there has been a nice correction in Boeing, but I don't have as much hope for the future as I do some of these other stocks. After that, we have Las Vegas Sands, which is currently down quite significantly for me. This stock has also underperformed. This stock is actually very close to the year lows, so which I do think is relatively cheap currently, especially if everything is set to reopen with casinos and hotels and traveling. I do think this stock could potentially be undervalued, but it's also speculative and risky, and it's not a top-tier blue-chip investment in my opinion. Next, we have QSR, which is Restaurant Brands. This stock is actually interesting. It's not the highest quality stock in the world, but I do think it's at a very great valuation, and with the dividend yield and just with the possibility of growth, I do think it's worth starting a position at these levels, considering it's had a significant retracement. After that, we have Scotts Miracle-Gro, NVIDIA, which had a 4-to-1 reverse split today, actually. So I really like NVIDIA. NVIDIA has been one of the best performers now for multiple years. It's a great company. It's an amazing stock, and I have a lot more hope in a company like this than I do something like Las Vegas Sands. After that, we have Campbell's Soup, followed by Take-Two Interactive, Kraft Heinz, and Norfolk Southern. This is a railroad transportation company. So there's a little bit of a mix of everything. We have growth like NVIDIA. We have dividends like Campbell's Soup and Kraft Heinz. We have some more gaming growth stocks, Take-Two Interactive. We have some industrial stocks, a little bit of everything. I like to stay diversified, and I really like dividends, but at the same time, I don't like all dividend stocks. I like a little bit of dividend stocks, I like a little bit of growth stocks, and a friendly mixture of both of them. After that, we have Activision Blizzard, another gaming company, followed by Intel, Air Products and Chemicals, and Chevron. Those last three are some great dividend growth stocks. We also have Micron, IBM, another dividend growth stock. We have DraftKings, which is a little bit more risky. This is actually probably one of the top most risky stocks that I've gone through so far today. But with the current price of DraftKings at, $45? It was about $42 earlier in the week. I do think, somewhere in that low $40, it might be worth buying, considering it was at, $75 or $80, $90 per share. We also have Delta Airlines, which is one of the better airline companies, one of the biggest. AT&T, Leggett and Platt, which is a furniture maker. They have a great dividend that is a dividend growth. It's a dividend aristocrat, or maybe even better, maybe a dividend king or something like that. Lockheed Martin, Verizon, Rocket Companies, AMD, Raytheon Technologies, Facebook, Amazon, Altria. I'm actually trying to build my position on Facebook, Amazon, Apple, Microsoft, Adobe, companies like that, pretty much FANG and the NASDAQ. I'm just waiting for these stocks to correct. Hopefully I can, buy at a better price than we currently are, but they've pretty much been the foundation and the backbone of this market, so it's going to take some kind of news or something for them to, have a correction or, drive prices lower. After that, we have Pinduoduo, Union Pacific, which is another railroad company, Qualcomm, Tyson Foods, British American Tobacco, which I bought today, Philip Morris, and BTI. These are two tobacco companies. Had a pretty bad day today, and I think they might be worth buying. And worst case, that you collect that nice 5% dividend yield or higher. So that's the main reason I'm buying them, is on low valuation as well as a nice dividend play. We have Caesars Entertainment, Nucor, McDonald's, Walmart, ConAgra, which I sold over 50% of my position today. I pretty much got in at the lows, under $34 per share. So I just sold my position to take profits because I bought it based on technicals and not really a long-term, vision with this company. So I kind of just took it for a quick swing trade and made some profits. Then we have Netflix, JP Morgan, Dow, Square, General Mills, QQQ, Louisiana Pacific, Apple, Barrick Gold, and McCormick in smallest position. I actually sold McCormick today as well. Similar situation where we bought it, we got in at a very good price, and we sold it as soon as we locked in, maybe 2 or 3% profit on McCormick. So that's my current positions. I also have about $3,400 to $3,500 of cash in the portfolio, which is about 20%. So we're currently about 20% in cash, which means we're 80% invested in these positions that I just showed you guys. So that's the portfolio. That's where we're at, and I'll continue to update you guys with, when I buy or sell out of something. I'll let you guys know, update the portfolio with you guys. So, as always, guys, thanks for watching the video. Don't forget to smash that like button. Subscribe to the channel if you haven't already. Check the description if you're interested in getting some free stocks. We have a bunch of different apps like Public, First Trade, Robinhood, Webull, pretty much all of the major brokers. So check that out and stay tuned for more. Thanks for watching.